is investor and publisher of the Gloom, Boom, and Doom report, Marc Faber. Always great to have Marc have you on in the loop. Now, would you agree with Soros here at all, or some parts of it, that Europe has been stabilized fundamentally?
It has been stabilized for now. The big question is, as he said himself, imbalances have not been solved, and these imbalances could come back and haunt the markets and the euro at some point in future. But in terms of stock markets, I have advocated a year ago, between actually April and June of last year, to buy European stocks in Portugal, Spain, Italy, Greece, and France, because they were extremely depressed. Since then, some markets have rallied very sharply. Greece is up from the lows by 100%. It tells you that anything can go up when you print money.
Well, Marc, would you, given the fact that there have been a lot of gains already, as you mentioned, in the European markets, a lot of the low-hanging fruit has been plucked, essentially. Are you not as, I wouldn't say bullish, but are you getting out of the European markets then?
Not really, because I think we made a secular low roughly a year ago. But I have argued that it is a time right now to reduce equity positions. I think the markets are at a difficult juncture. They are between overbought and the euphoric stage. Now, I'm not ruling out that they can go up somewhat more, like in '87. Between January and August, we went up 40%, but then we also fell 40% in 2 months' time. So essentially, the gains were wiped out very quickly. And I think that the market said the S&P was at 666 in March 2009. We're close to 1,500. We had already a huge bull market, and a lot of the good news has been discounted by the markets already.
So you're saying we're in for a correction on the S&P?
I think regardless of what the market will do thereafter, near term, a correction is overdue, and usually February is a seasonally weak month. We will then have to watch how the correction unfolds, whether maybe we've had already a major top, like in January 1973, the market peaked out and thereafter was sliding for 2 years. It will be interesting to see how the correction unfolds.
Marc, you've noted before, and this is a position I know you've talked about before, even back in November when you discussed sort of corporate profits and, and a shakeout even, as we're getting the results. But you've also noted, Marc, before that you're not exactly going big on any shorts in the markets. Why is that?
Well, I think the problem with shorting the markets nowadays is that you have this huge intervention by governments. You look at, say, bonds of Italy, Portugal, Spain, and so forth. They rallied last year very strongly. There was a huge profit opportunity. I admit I missed it, but the profit opportunity came about as a result of government intervention. And I feel the markets are, some people say it's intervention, I can call it manipulation. And if this manipulation continues, you don't know how far they will go. The only thing I know, one day the markets will punish the interventionists, the Keynesian and the monetarists at the Federal Reserve and at the ECB and so forth, because the markets will one day be more powerful. Now, how will this look like? Will it be that the bond market collapses, or that equity markets become a bubble, which would be very embarrassing for the Fed, say, if the U.S. market became a gigantic bubble,
if there was a bubble
and at the same time the economy doesn't recover.
Marc, you've never held back at all in giving your opinion clearly about political leaders and so forth. So I want to ask you about Tim Geithner. It's his last day on the job at the Treasury and the legacy he leaves behind. What do you think of Tim Geithner and his successor, Jack Lew? Is he going to be any better?
I doubt there will be much change. And I think, to be fair to Mr. Geithner, he inherited a colossal mess. He's involved in politics, and he has to listen to what the politicians want to do and so forth. So, per se, he did actually an okay job. Where it's not okay is that basically nobody that committed financial fraud or contributed to the fraud was prosecuted.
Marc, we're going to have to leave it there. I appreciate it. Marc Faber of the Gloom, Boom, and Doom Report.